Imagine if you could go back to 1995 and invest in Microsoft, or 2004 to grab some Google shares, or even 2010 to buy Bitcoin when it was just pennies. Well, that's precisely the kind of revolutionary moment we're facing right now with quantum computing. Picture this. While your smartphone takes about 30 seconds to sort through a million numbers, a quantum computer could do it in less than a second. Sounds brilliant, right? Yes. We're talking about technology that could cure cancer, predict global weather patterns months in advance, and revolutionize cybersecurity as we know it. And here's the kicker. While everyone's been obsessing over AI stocks like Nvidia and Microsoft, quantum computing stocks have been quietly building the next technological revolution. Just look at the numbers. IonQ surged over 200% in 2023, D-Wave systems jumped 160% in just 3 months, and we're only at the beginning. Goldman Sachs predicts the quantum computing market will hit $300 billion by 2030. That's bigger than the entire gaming industry right now. But here's the thing, and this is crucial. You can't just throw your money at any quantum stock and expect to strike gold. Today, I will show you the top 5 quantum stocks you must have on your radar for 2025. These aren't just random picks. I've spent countless hours analyzing their financials, technology capabilities, and market positioning to bring you the cream of the crop. Before we dive in, you don't need to worry about subscribing or hitting that like button just yet. We'll get you this valuable information first. Trust me, by the end of this video, you'll want to stick around for more insights like this. First, let's talk about the elephant in the room, risk. Like investing in Amazon or Apple in their early days, quantum stocks carry inherent risks. Think of it this way. You wouldn't bet your life savings on a lottery ticket, right? The same principle applies here. I always tell my students to never put more than 10% of their portfolio into any position, sector, or stock. Diversification isn't just a fancy word. It's your safety net in this volatile market. Quantum computing stocks are having a tumultuous week, but one fund manager says investors should focus on the long game in this sector. Earlier this week, quantum computing stocks broadly slid after Nvidia CEO Jensen Huang said beneficial quantum computers were decades away. However, Joe Tay, portfolio manager of the Rational Equity Armor Fund, said Huang's remarks should help investors manage expectations rather than downgrade the technology's future possibilities. Huang's comments offer a realistic perspective rather than diminishing the immense potential of quantum computing, said Tay. Quantum computers harness quantum mechanics to solve problems using subatomic particles like electrons or photons. Quantum bits, known as qubits, allow particles to exist simultaneously in more than one state. Theoretically, this could allow computers to perform calculations that might take millions of years. Speaking to analysts during the question and answer session on Tuesday, Huang signaled that it would take decades for the technology to arrive. If you kind of said 15 years for useful quantum computers, that would probably be on the early side, the Nvidia CEO said. If you said 30, it's probably on the late side. If you picked 20, many of us would believe it. Number 5 is D-Wave with ticker QBTS. The reason why this stock makes it to the bottom is, number 1, it's the cheapest, and number 2, it doesn't have the strongest fundamentals or financials in comparison to all the other stocks on this list. But it is affordable enough to get in, and it still cuts. Looking at D-Wave Quantum, you can see that the price was way down around $1 until election time when it skyrocketed. In all honesty, this stock right now, in its current valuation, isn't worth much more than $2 or $3, but future guidance baked in is giving it a price of $6 to $10. Because of demand and people buying it up, the price has dropped, and it was up around $10.41, so this is a much more appealing price. I want this price to fall in the $4 to $5 range, where I'd be scooping up many shares. Right now, you can start adding to your position, and if quantum starts dropping or D-Wave quantum starts dropping down to, let's say, $4.50 or $4, you'll want to start doubling down on adding this to your portfolio. But remember, you want to use the dollar cost average. We have a market cap of $1.64 billion, and then, looking at financials, we see $9.42 million in revenue. So, $1.64 billion divided by $9.42 million gives us a price-to-sales ratio of 174. Not the greatest. They have some revenue here, but are not entirely profitable after tax. There's no EBITDA either, and their EPS on earnings is minus 8 cents. They've tightened the ship slightly and slipped in the last quarter. Looking at the balance sheet, they don't have enough assets to cover their debt, and they have $31 million in debt. This is why it's at the bottom of this top 5, and its cash flow is negative. This is a perilous play for the next few years, which is why it's on the bottom, and I would be careful about how much of this stock you add to your portfolio. Number 4. IonQ with ticker IONQ. This stock has slightly better fundamentals than D-Wave and much better financials, but it's a little more expensive. This is the better buy between the two, which is why it's in the 4th position, although it still carries inherent risk and requires a long-term commitment. Looking at IonQ, we can see that they have a $30 price right now, and back in November, the price was closer to around $15. IonQ is better as we move up the chain in the top 5 stocks. It had a very smooth uptrend, though it did pull back. Honestly, $52 is ridiculous right now, even $30. We look at the $6.55 billion market cap, share float of $186 million, and their total revenue. Net income is negative, very similar to D-Wave, but if we look at the balance sheet, we see that their assets cover their debt entirely, and they have no debt. They have $517 million in assets with only $54 million in liabilities, leaving them with $450+ million, and they also have $353 million in cash. Unlike D-Wave, which has $68 million in assets, $83 million in liabilities, and $31 million in debt, IonQ has enough to cover its debt and then has cash and assets left over. IonQ is much better positioned, partly because it's more expensive. IonQ is the one I would look to invest in even more than D-Wave. Number 3. Rigetti Computing with ticker RGTI. This is a very popular quantum stock position parallel to IonQ, but some things about the stock give it a little more potential. Looking at Rigetti Computing, we can see it's much more affordable than IonQ. We have a $2.43 billion market cap and a shares float of 215 million. Looking at the financials, we see $11.89 million trailing 12-month revenue, which gives us a price-to-sales ratio of 204, very similar to IonQ and D-Wave. The price has retraced back over half its price from November's $18 to $12. So if we can get this stock below $10, maybe in the $8 to $9 range, it will be a better entry point. Although there's more room for cooling off, I would like to get Rigetti Computing somewhere in the $6 range, or I would like to sell some puts on it. The big reason I picked Rigetti slightly above IonQ is because it's more affordable. And when we look at IonQ's market cap of $6.55 billion with 186 million shares float versus Rigetti Computing's $2.43 billion market cap and 215 million shares float, the shares float are very similar, but the market cap is about a third of IonQ's. This means the stock would be around $30 if the market cap and shares float were the same as IonQ. Number 2. Quantum Computing with ticker QUBT. I'm picking this over Rigetti Computing because they have 2 cents less of a loss on EPS, and they also have 102% year-over-year growth versus Rigetti Computing's minus 23% year-over-year growth. Quantum Computing also has a much more attractive price than IonQ or the other stocks I've shown you, and it's retraced almost completely back to where it was at the beginning of December. You are getting a steal if you can get quantum computing for $5 or $6. However, I don't know if that's possible. It might retrace a bit more. I think the floor is probably $7, maybe a little bit less, but dollar cost average, and don't add more than 10% of your portfolio into any stock, sector, or position. Number 1. Defiance Quantum ETF, QTUM. This ETF is similar to SPY or any other ETF and will expose you to Rigetti, D-Wave, IonQ, Teradyne, On Semiconductor, Taiwan Semiconductor, and KLA. Teradyne and On Semiconductor are semiconductor companies, while D-Wave, Rigetti, IonQ, and Quantum Computing are pure-play quantum companies. Taiwan Semiconductor is another semiconductor manufacturing company. Looking at QTUM Defiance Quantum, we can see that it's retraced a bit, bouncing off the 100-day moving average. That would be stellar if we could get in around $75 or even $70. It is not likely that's going to happen, but it is possible because if Taiwan Semi and KLA start to pull back, this will likely pull back as well. It wouldn't surprise me if this ETF could eventually make it to $200, $300, or maybe even $400 to $500 in the next 4 to 5 years, maybe 8 years, maybe sooner, depending on how things go with quantum computing. But just like the SPY, can you imagine if you had gotten into the SPY when it was only $80? Sure, this could be a 5 to 10 year investment or more, but you could potentially 5x, 6x, or 10x your money throughout that time. Remember to keep your portfolio well diversified and no more than 5 to 10% in any given stock. But hey, it's your portfolio and your money. Just be sure to do your due diligence. Do like and tap the subscribe button to be part of this community. See you in the following video. Thank you.